Hey everybody, so I just wanted to make a technical recap video. Now, the big question that everybody is asking is, are we going to continue rallying on this debt ceiling optimism? And once this bill gets passed and the debt ceiling gets raised, are we going to rally even harder? Or are we going to sell the news because, are we going to later focus on essentially the liquidity drain that's going to occur in the markets from, the Treasury issuing a bunch of bills and this corporate quarterly tax drain. So, that's the big question, and that's what we don't know. So nobody knows what's going to happen. So let's just go over the technicals real quick. If we're looking at the Fed funds futures, just to start off, we're looking at the May contract and the December contract, and essentially the spread between those two. So right now we're getting a reading that's basically at 0. So this is telling us that we are expecting 0 rate cuts by the end of the year. So the current rate is basically going to be exactly where we are in December. So nothing is going to change, is basically what the Fed funds futures are telling us right now. So, while this is happening, the stock market is going up. So that right there is a divergence. Now, if we're looking at the Qs, the immediate thing that I want to focus on is this fib level right there. So this is the 61% retracement level. It's right at around 349.71. Now, if we're looking at the futures right now, that's pretty much where we're at for the Qs. So if the Qs were to rally another 0.32%, that would essentially be very close to that fib level. So that's kind of where it's being pinned right now in the futures market. So going back, take a look at what the RSI is doing. I mean, if we're looking at RSI on the 10-year one-day, this is at 74. So this is a 74 RSI reading, which is very, very high. Now, sometimes, you could get RSI staying in these levels for, maybe like a month or two. Like you can see right here, it's kind of trending within that level for quite a bit, but you do see these minor pullbacks here and there. And, these kind of things, essentially, when we do stay in this high RSI range, we eventually revert back to that 30 RSI, into that oversold territory. So that's the thing that you want to watch out for, because if we do see that reversion, if we do get a little bit too frothy on the RSI, then you could see that reversion back to 30, and that could be a significant sell-off. That could easily be like 10%. But honestly, in the grand scheme of things, from where we've essentially gone from just a couple of weeks ago, 10% on the Qs would not be a lot. So, right now, the big thing that I'm focusing on right now is that fib retracement level that's at basically 349.71. So that's what I'm focusing on right there. And then another thing that I'll focus on is within these next 2 weeks, maybe possibly look for some sort of reversal. So I'll kind of show you what this looks like. So I'm going to go on to a weekly time frame, so the 10-year 1 week, and I'm going to zoom in here. So we're going to zoom in, and I'll show you what these reversal patterns look like. So you can see right here, we have this bullish candle right there. Then we have the shooting star-like candle, and then we have this candle right there that essentially erases, these two price actions right there. So that right there would signal some sort of reversal, and then you see some more downside right there. So right here, you see this bullish candle, then you see this kind of doji indecision candle. Then the next week, you see this hard sell-off that essentially just reverses this price action right there. And then you see some more sell-off. But then, obviously this kind of turned out to be a bit of a trap. So then you see right here, we have a bullish candle, and then we have a bearish candle that undoes that. Then we have another bullish candle the next day. So, this was a lot of trickery right here, going right here. And then you see the strong rally. So these are the type of things that you want to look for. You want to look for, a bullish candle followed by a bearish engulfing candle like this one. That would essentially signal a strong sell-off like we saw right here. So these are definitely the things that you would want to watch out for. So maybe, this candle is bullish. And then this week, we have a bearish engulfing candle that undoes this. Or, maybe this week, we have a candle kind of like this right here, maybe like a doji, or maybe like a shooting star right there. And then the next following week would be a bearish engulfing. So that would be essentially what a reversal would look like on the weekly time frame. So that's something you want to watch out for, because like I said, RSI is very, very high. Even on the weekly, on the weekly chart, we're at 70 RSI. So this is kind of where you want to get definitely a little bit more defensive, because we're seeing some strong days. We're seeing like 1% plus days and just back to back to back to back. So, right now I would say the Qs are definitely a little bit dangerous. So moving on, we're looking at the SPY. So SPY right here, RSI is not as frothy. It's at around 59. And if we're looking at MACD, MACD is ever so slightly crossing above. So this is kind of the risk right here. MACD could easily go back into that inverted state. So with the Qs, if we're looking at the MACD on the Qs on the daily, so let's go on the daily time frame. So the 10-year 1 day, you can see that MACD clearly has a head start. It's bullish right there. But with the SPY, not so much. It's ever so slightly bullish. We're just starting to get that crossover. So maybe we do see some more rally, or maybe, this quickly inverts on itself. So to me, the SPY is a little bit more iffy. I'm not as sure. But one thing I do know is that if I kind of zoom out a little bit, and let's make sure we're on that 10-year 1 day, zoom out a little bit further. We do have this gap fill. So this gap fill is right at around, it's pretty close to 422. It's right around like 421.85-ish. So we didn't quite fill that yet. So we almost came close. If we went up like $1 more, then we would have made it. But as of now, we have not filled that yet. So if we do fill that, I'm wondering how price is going to react. Now, if I go on a shorter time frame, like let's say the 90-day 1 hour chart, you guys can clearly see that we did have this support trend line. We broke underneath it, but then we gapped right above. So right now, this could potentially be a double top scenario, if we were to just quickly fill that gap and then tank. But, you have to entertain the thought that maybe this could go a little bit higher. Because like I said, RSI is not that high on the Qs on the day chart. So we're really only at around 60 reading. So it's really not that high. Now, another thing that I do want to note with SPY is, with SPY, if I'm just looking at this, the next level right here, the fib level, would be the 61% retracement. This is right at around 429. And I do want to note that we do have another gap right around there. So I'm going to have to show you on a lower time frame. So, let's go ahead and go to the intraday. Let's go on 360 days and 1 hour chart. So now I'm going to have to go ahead and show you. So we've got to go back in time here. And it's right there, as you guys can see. Let me zoom in on that for you. So this other upside gap, that's right at around 427. So if we did want to fill that, we could just rally all the way up there. And then what's stopping us from essentially hitting that next fib level? So that would be right around 428.98. So basically 429. So that would be more upside right there. But at that point in time, I guarantee you that the RSI would probably be much more frothy than it is right now. So let's go ahead. Let's look at the next chart. So Tesla, one thing that I do want to note on Tesla is that we did hit that 200-day moving average, and we did reject off that level. So another thing that I do want to note is that there is this support level, which is now resistance. So you guys can see right here, that was strong support right there. So this level right here is right around 204.66. So that would essentially be right above that 200-day moving average. So if we did make it above that 200-day moving average, which is right around 222, this will be the next resistance. And then after that, it'll be right around 217.65. So that's essentially what we're looking at for Tesla. And if we're looking at the RSI, it's not too frothy. It came off oversold conditions. I've talked about this in videos in the past. You wouldn't want to be shorting Tesla when it's around 30 RSI. So obviously, that did play out pretty well. This is rallying all the way back. So Tesla does do these inversions, where we go from 70 plus and then we go right back down to 30 and then right back up to 70 plus right back down to 30. So these are the type of things that you do want to watch out for Tesla. If it does get back over that 70 level, you don't want to be a buyer. Either you want to sit out or you want to be shorting it. So obviously, if you are shorting it, you're definitely taking a lot of risk because a stock like Tesla has huge upside moves. So moving on, if we're looking at Meta is definitely frothy. It's at around 79 RSI, and it's been frothy for quite a while. This has literally gone on for several months now, like 3 months where it's been in these high areas. So, when Meta does have these reversions, when it goes to 70 plus back down to 30, you could see pretty substantial sell-offs, like 10 to 15%, or like 10 to 20% maybe is what I would say. So definitely do watch out. We do have this fib level right here. It's at 270.83. This is the 61% retracement level. So watch out for this level right here. And then obviously, as support, we have that 235.94, and we have the support trend line right there. So, we still have not retested the support trend line. So that is definitely something that I've been watching out for. And I'm surprised that we have not retested it yet. So we've essentially just made a new trend line right there. So, at some point in time, I really do think that we are going to retest this trend line. And, if I am looking at MACD right now, MACD still looks pretty bullish right there. It definitely had that fake out right there where it did look like it was going to cross under, but that definitely probably did trap some bears right there. Now, moving on, if we're looking at Microsoft, something interesting about Microsoft is we do have this macro level trend line right here. So I'm going to go ahead and show you that. So I'm going to have to go on the 10-year 1 day and then really zoom out here to show you guys this. So you guys can see, support, and then, it was acting as resistance back here. So, when you drag that out, that's essentially where we're at right now. We're literally sitting right there. So, obviously Microsoft is looking pretty darn bullish, but take a look at the RSI as well. It's right at around 74. So it's definitely getting pretty frothy as well. And, if we're looking at the MACD has topped out at these levels before. So, Microsoft, definitely watch out a little bit. It has broken out of this wedge right there. And, it's very possible Microsoft can just go right back to all-time highs. It's about 10% away. And we've been seeing 2% moves easily. So it's very possible it could go right back to all-time highs, especially if it does break this trend line right there. But, as of now, I would definitely be just a little bit cautious given where the RSI is. Now, moving on, take a look at DXY. So DXY, it's been moving up, and, there's another divergence. DXY is moving up, and the Qs are going up as well. And if we're just looking at DXY, RSI is pretty frothy as well. So it's right around 67. But, if we do see that spike in yields just from the Treasury bill issuances after the debt ceiling is lifted, then, it's very possible that the dollar could go up even more. So definitely something that you do want to watch out for. Now, if we're looking at the shorter time frame, there is this gap right here that's unfilled that literally takes us right to around 105.63. So right here, we are at this gap level. If we do get above this level, I would be looking at that 105.63 for the dollar. And moving on, if we're looking at Google, Google is pretty much hitting resistance right here. This is the 61% retracement level right at 125.72. So this is primarily what I'm watching for. If it does break above this, then I would think that the next level of resistance would probably be right at this fib level right there at 137.21. So definitely something to watch out for. Now, another thing that you want to pay attention to is this fib level is pretty key. You can see right here, it was acting as support several times. So support, and you've seen some major bounces off this. So I would think that this would be a pretty strong resistance, but obviously I could be wrong just given the extreme tear that we've been on. So if you're just looking at MACD and RSI is still frothy. It's at 71.46. It's coming off, close to 80. So it was around 80. It did fall. So, it's taken a substantial dip right here on the RSI. If we're looking at the MACD right here, if MACD were to curl under, it could curl under pretty deeply. So definitely something to watch out for, just given this strong momentum that we've seen lately. Now, next chart, Apple. So Apple right now, we did have this rising wedge, and we are kind of hitting the top resistance level of this rising wedge. So as of now, Apple is kind of just chilling around this 170 area. So, something we definitely need to watch out for. If Apple does get above this rising wedge, then it's very possible that, Apple could go back to those all-time high levels. And those all-time high levels were literally at around like 183-ish. So definitely something that we do want to watch out for. Now, Amazon, Amazon, right now we are hitting resistance right around this 122.14 fib level. So this is the 38% fib retracement level. So something to definitely watch out for. We have seen some pretty strong resistance here before. So right there and right there, you can see a substantial sell-off right there. But like I said, we did break above this trend line right here, which was acting as resistance several times. So it's very possible that this right here could be another false breakout like it was right there. But, it's going to be very clear if it is, because you're going to see a very strong move down, like these gap downs. So definitely something to watch out for. But we do also have this golden cross scenario. So it's very possible that we could just see some continued upside. And the next fib level that we would want to watch out for is that 50% retracement at 134.74. And as far as RSI goes, this is around 69. So it is a little bit overbought, but not as crazy as Meta or the Qs. And if we're just looking at MACD right here, MACD, it did look like it was going to go bearish, but it did kind of bounce off there. So do watch out for that MACD. If it ever does cross over to a bearish crossover, I do think that it could get a substantial sell-off. And if we're looking at the VIX, VIX right here, I would have thought that it would have fallen a lot more, but somehow it's still at 1746. One thing that you do want to pay attention to right here is I'm going to zoom in. So if you guys see, it literally bounced off my macro level trend line. So I'm going to zoom out a little bit and show you guys that. So I do have this macro trend line right here. It's acted as support many times. And we essentially tanked, but then we found support right there and then kind of rallied a little bit. So you guys can see right here, I'm going to go on a 30-day, 30-minute chart. We are leaving a few upside gaps. So I'm going to zoom in right there. So I got to go on a shorter time frame to show you guys that. So this is the 5-minute, 10-day chart. So if I zoom in right here, you guys can clearly see, there's this gap right there that wasn't filled. There's also this gap right here that's not filled as well. So it would not surprise me if in the near future, we do see these gaps getting filled. Lastly, I do want to look at VXN. So VXN right here, I was actually very, very surprised that VXN did not just have this massive gap down, just given how strong the Qs have rallied. So VXN, if I'm just looking at a 10-day, 5-minute chart, it actually rallied. So yeah, VXN actually rallied while the Qs were just rallying like crazy. So definitely something to watch out for here. This could just mean that more people are hedging, just given the debt ceiling scenario. And I guess one more thing that I do want to look at is Dow. So if I'm looking at DIA, and let's go on the 10-year 1-day. So if I'm just going on this chart right here, right now price action is actually sandwiched right between the 200-day moving average, which is kind of in alignment with this 50% retracement level right at around 328, and this 50-day moving average right there at around 332.96. So we're literally wedged in between these two moving averages. So it's a moving average sandwich. So if we were to get above the 50-day moving average, I would think the next level is going to be 337.84, which is the 61% retracement level. If we get below this 200-day moving average, I would think that the next level would be this 318.28, which is the 38% retracement level. So that's kind of how I'm looking at it. If we have multiple closes below that 200-day moving average, I would think we just come back and we retest this fib level, which kind of has strong support, as you guys can see right there, where we did see this accumulation event. So if this is a distribution event right here, then yeah, if we break that 200-day moving average, we could just come right back down here. And then we'll see if buyers step in and accumulate again, or if you just see more sellers. So that's pretty much what I'm seeing with the Dow. And just last thing right here, RSI is sitting at 45. So you have the Qs that are sitting at 70 plus RSI. You have the Dow that's sitting below 50. So this kind of tells you a lot about just how the markets are playing out. You definitely have these two economies at play where the Dow is clearly having a strong sell-off with a lot of their stocks just falling, whereas the Qs, the technology sector, that is in a strong move to the upside. And just to finish things off, we're going to take a look at the expected moves. So just take a quick look at this and screenshot it if you need to. And obviously right here, I do have the RSIs. I have them highlighted if it's over 70. So you guys can clearly see that, Microsoft is overbought, Qs is overbought, Nvidia, that's way overbought, Google, that's overbought, and Meta, that's overbought as well. Amazon is pretty much reaching that level too. So hope you guys enjoyed this video and have a good one.